Hello and welcome to the session on the use and challenges of KYC registries. And this forms a part of our digital ID track. My name is Shami Stepaya and I'm from the World Bank Group. I want to begin by telling you a little bit about FIGI, not the country, but the Financial Inclusion Global Initiative program that we are showcasing here today. It is a partnership between the World Bank Group, the CPMI, which is the Committee on Payments and Market Infrastructure, and the International Telecommunications Union. The program is wholly funded by the Gates Foundation. Now, the key objective of this three-year program is to provide technical assistance and to encourage policy dialogue to support and accelerate country-led reforms. And this is primarily to meet financial inclusion goals. We do this by working across three verticals. One is electronic payments acceptance. The second is digital ID, which is what we are speaking about today. And the third is security, infrastructure, and trust, which is the session after this. To share some of the work and ideas more widely, we organize symposiums such as these, which unfortunately we've been forced to do virtually this year. And this is the third and final symposium that we are having as we bring this program to a close at the end of this year. So today, as we said, I'm going to talk specifically about identity. Now, identity, as you might have seen in the video before, is a basic right and a core feature of access to finance. And it becomes all the more important as we move into the digital realm and hence requiring identity to be seamless, work remotely, and be tamper-proof. Now, in order for individuals and corporates to gain access to financial services, so be it from onboarding or access to any types of new services, from loans to insurance products, KYC checks need to be done. Now, currently, this process is very expensive, and it also probably takes a large amount of time to conduct the due diligence processes. And sometimes it takes up to 90 data fields that need to be looked at and can cost upwards of $100 to do each KYC check. And this is all to ensure that applicants are not on blacklists, that they have legitimate sources of income, that they are the ultimate beneficial owners. So this is where the idea of collaborative CDD comes in. So the public and private sector, both together and separately, are looking at ways in which to work collaboratively to help financial services providers meet international CDD requirements. Now, this concept is still relatively new. Approaches can differ in form and function. As we will hear a little bit later, there's different ways in which it can be for individuals whereas for corporates. But they can have wider goals such as inclusion and stability and integrity as well, which are of particular importance to the regulator. I think we are now reaching a stage where we can share data and the compliance function at a level that was previously unthinkable. Today, what we are going to talk about is KYC registries, which is one type of this collaborative CDD method. And what a KYC registry is effectively is a centralized repository of key ID attributes. So it helps with the identification of clients and it contributes to the efficiency of the verification process. Our very experienced panelists today are going to help us delve and sort of unpick the threads of this very complex topic. And they're going to bring with them a number of different jurisdictional contexts, and they join us from both the public and private sector. So I think it's going to be a very, very interesting conversation. A quick note on structure. Each of the panelists are going to do an 8 to 10 minute presentation, after which we will have a panel session. But we will also have time for questions from the audience, so please do get your questions ready. And you can ask them anytime you want, and I will pick them up as we go along. So first up, we have Kendrick, Director at the Government Technology Agency of Singapore, GovTech. Where he's responsible for the SingPass program, which I'm sure some of you know is the National Digital Identity Program of Singapore. Kendrick oversees the product management of APIs and enabling of digital payments with the ultimate aim to secure seamless transactions for residents, businesses, and government agencies. Among the other roles he also sits on the Trustworthy Digital Infrastructure for Identity Systems project with the Alan Turing Institute. Welcome, Kendrick. Floor is yours.
Thank you, Shamista. Good morning, good afternoon, good evening, everyone. Thank you for inviting me to the symposium today. I'm honored to share with you how the government in Singapore partners our private sector by enabling them to perform faster and more accurate KYC to deliver instant financial services to individuals, and businesses. If you have not been to sunny Singapore, we are a small young nation with 5.7 million people in less than 800 square kilometers of land. We are also a highly connected nation with 1.6 million mobile phones per person, 95% broadband penetration among households, and 98% of adults have bank accounts. Next slide, please. In the last 55 years since the independence, Singapore's economic progress has been built upon being an open and interconnected global city. That required us to build excellent world-class infrastructure, such as seaports and airports, to facilitate the flow of people and goods. In the digital era, it is important for us to have trusted digital infrastructure that facilitate the movement of data, enabling trusted data flows across boundaries of systems, organizations, or even borders. All these facilitated by the control and consent of the individuals. We have built this digital identity infrastructure, and collectively we call them the Singapore National Digital Identity NDI stack. At the foundational layer is a trusted data ecosystem and our data platform called MyInfo. Building upon our legal physical identity, foundational identity issued to citizens at birth, the other layers of the stack enable this consent-driven data ecosystem by providing high levels of identity assurance and authentication assurance, and expose trust services through APIs for use by public agencies and private organizations. For the end user, they use a crypto-based mobile app called SingPass to access the digital ID and the NDI APIs. Next slide, please. We launched the MyInfo data platform a few years ago. MyInfo's primary purpose is to allow citizens to access the information across all government agencies in Singapore so that they do not have to repeatedly provide the same information or submit the same documents as they transact with different government services. Furthermore, it gives our citizens the control to share the information with the private sector. And of course, this central to this data ecosystem is that any data sharing is based on explicit consent. Depending on the nature of digital transaction being performed, MyInfo allows residents the flexibility of accessing and share data based on consent, either as an individual or both its personal and corporate data if it's a small business owner. While MyInfo is currently a federated ecosystem of centralized authoritative data sources, we're in the process of exploring complementary decentralized distributed models as well. Next slide, please. MyInfo has been well received by citizens and businesses. Businesses benefit as they are able to simplify their user journeys, increase customer conversion rates, and have access to authoritative data under the principles of our Personal Data Protection Act. This is especially useful when onboarding new-to-bank customers, and to the citizens, they enjoy better customer experience. The use of MyInfo has resulted in an average decrease of up to 80% in application time for users, and financial institutions reporting up to 50% higher product approval rates due to better data quality and cost savings of up to $50 per customer acquisition. This service sees more than 200,000 transactions a day, and all consumer banks in Singapore, including international banks like Standard Chartered and Citi, are also on the platform. Next slide, please. To further illustrate this experience, this chart shows the research done by a UX company built for Mars that sets out to discover how easy it is to open a bank account in the UK, and whether there's indeed a difference between traditional banks and challenger banks. The Centre for Finance, Technology and Entrepreneurship adapted it to include Singapore banks and fintechs. As you can see from the chart, the top 5 in the list have something in common. They all use MyInfo. Of course, the number of clicks does not equate to good user experience, but user experience cannot be great if I have to click through 50 times or more. Another research reports that it takes 2 to 36 days to open a bank account in the UK. For the banks using MyInfo in Singapore, the account opening can be instantaneous. So are credit card and loan applications. So it is not uncommon for users to receive their credit card digitally, download it into their phone, and use it at the merchant, even before the physical card appears in the mail a week later. Next slide, please. Today, MyInfo powers more than 600 digital services for more convenient customer registration, or KYC, in compliance with regulations, beyond instant financial services. This range from signing up for Apple's Lumi Health Wellness program, registering as a seller on Shopee or Qoo10, or even registering for tax deductible status with the government when making donations to charities. We continue to receive more than 30 proposals per month for the use of Mindful APIs, and we look forward to powering more paperless, presenceless, and instant services with MyInfo. Last year, we launched new national digital identity APIs, such as passwordless authentication, digital document signing, and face verification as a service. These are being piloted by financial institutions and other organizations who use them in conjunction with MyInfo to digitalize customer journeys end-to-end to better serve existing to bank customers as well. For example, SingPass login APIs are being used to facilitate authentication of customers onto mobile banking applications. Our face verification API is being used to check account balances at ATM with the aim of eventually enabling cash withdrawals when paired with another appropriate authentication factor. And our digital signing API is being used in wealth planning, where it qualifies as a secure electronic signature under our Electronic Transactions Act, where burden of proof is on the challenging party. Next slide. I hope this short presentation has given you a glimpse of how KYC is being turbocharged in Singapore through the collaboration of public and private sectors, particularly the financial institutions. In this session, I look forward to learning from your experiences and exchanging notes with my fellow panelists. Thank you.
Thank you so much for that, Kendrick. It's always interesting to see what Singapore is up to. I almost think that they always end up being the front runners that everyone tends to follow later. And I'd like to delve a little bit into sort of the APIs and the data sharing aspects that you've brought up, but maybe we'll leave that for the question session. And next up, we have Gamu Chirai Moyo. She was previously at the Reserve Bank of Zimbabwe, and Gamu now works with Afrexim Bank. She supports them on the development of the Mansa repository platform, which seeks to create transparency and visibility for African entities. Bringing her unique public and private sector experience, Gamu will talk to us about this Pan-African digital repository that aims to promote intra and extra-African trade. Welcome, Gamu. Gamu, you might be on mute.
Thank you, Shamista. Thank you for the introduction. I would want to say good morning, afternoon, and evening to our audience. And I'm very happy today to get this opportunity to be talking to all of you regarding the Mansa repository platform. The Manta repository platform is a development by the Afrexim Bank, which is our Africa Export-Import Bank. The bank is basically owned by all the governments of Africa. We have got 54 countries in Africa, and when we talk about Afrexim Bank, we are talking about co-ownership of this entity, and we have developed this Manta platform with a view to ensure that we advance the continental agenda regarding financial inclusion, as well as promoting visibility. Next slide, please. I'll cover the background, the reasons why we had to come up with the Mansa platform, and I'll talk about the platform itself and the benefits that we'll get from the platform. Next slide, please. Can move ahead. Next slide, please. Okay, as a way of background, we know that Africa has got a lot of catching up to do with the rest of the world. And mainly when we look at world events like the current COVID-19, they do have an impact on Africa to a greater extent. In 2014 and 2015, there was what we called de-risking by international banks. And mainly here, we were talking about the compliance arena, whereby you would note that maybe a decade ago, know your customer requirements for customer due diligence were around 1%. But because of the evolution of time and events that do happen, we have seen an increase in the need to adhere to KYC requirements is set by international bodies. And currently we are looking at around 16% requirements in terms of KYC. So this in itself comes in to cause a lot of challenges to African entities. And one of the main challenges that resulted in us coming up with the Mansa platform was the de-risking aspect. In 2015, Africa as a whole saw a number of correspondent banks leaving the soils of Africa for the sole purposes that the cost of compliance or carrying out customer due diligence was high compared to the benefits that these entities were getting from the transaction in Africa. So as a result, they left the soils of Africa and cut the relationships. We have also seen an elevation in compliance anti-money laundering standards with the Financial Action Task Force tightening the hook. And we have seen a number of African countries being left behind or being grey listed. Currently, as we speak, there are about 5 countries in Africa which are grey listed for various reasons. And one of the main reasons is failure to come up with solid structures that ensure that customer due diligence or know your customer information or infrastructure is available. So the Mansa platform is the answer to these challenges. One also of our other reasons for coming up with the Mansa platform was to facilitate trade within Africa itself. You would know that because of high risk perceptions around doing business with African entities, and individuals and companies normally shy engaging in exchange or trade with African counterparties, mainly because of lack of trust. And the Mansa platform comes in to give a platform for all African entities to showcase their profiles and showcase who they are so that there is actually confidence or a platform that will allow the entities to ensure that whoever they are trading with is an authentic organization with an approved or verified ID, digital ID. The platform does have or offer an Africa entity identifier, which is a unique number, which can be associated, which is associated to each and every entity that comes on board. So that way, we hope to promote and facilitate trade within Africa itself. Above all this, we have noted also that most entities, over 60 entities in Africa, are small to medium enterprises. And these small to medium enterprises are either run by individuals or they are owned by families. So because of that reasons, there are low corporate governance standards. So through the Mansa platform, we have come up with a standard which will ensure that small to medium enterprises and family-owned businesses also come to the table and be able to access finance, whether locally or internationally, by adhering to the best practices of corporate governance. Next slide, please. Yes, now let's talk about the Manta platform itself. The Manta platform is named after a Malian emperor, Mansa Musa, who was known for trading in gold. And he is known to have pioneered trade between Africa and the rest of the world. He is said to be the richest man. And where I've read, I've noted that even today they say that there's no individual currently who is as rich as Mansa Musa. Of course, some of these things will be myths. So Mansa Musa was known, and we thought that information in today's world is the new gold. So Mansa Musa was known for trading in gold, and he put Africa on the world map. So the platform basically is named after Mansa Musa. And the main purpose of the platform is to provide a single source of primary KYC, know your customer data, which is required for conducting customer due diligence checks on counterparties in Africa. So the platform is solely dedicated to African entities, both financial institutions, corporates, and small to medium enterprises. So, next slide, please. How do we onboard the Mansa platform? The onboarding the Mansa platform is very simple. The platform is web-based. In other words, you can access it from any point of the world using a web browser, any web browser. Our website is www.mansaafrica.com. And when you register either as a financial institution, as a corporate, or an SME. So all African entities have got access or have been given the opportunity to be seen by the rest of the world through this Mansa platform. Yes, while the platform is really dedicated to African entities in terms of profiling themselves, the platform is open to the rest of the world in terms of accessing the data which is on the platform. So the process of onboarding is that an entity will come in and register. The registration process has to be approved. So the process goes from initial origination of the registration process. It goes to Afrexim Bank, where we do our own assessments, given the information that has been submitted on registration. And upon approval, the profile is published, and it will be subsequently accessed by subscribers. And those subscribers, here we are talking about the correspondent banks. And remember, on introduction, I said Africa was hit hard by the de-risking that we saw in 2015. So, and one of the main reasons for the de-risking was that correspondent banks were saying the cost of compliance or accumulating data for African entities is very high compared to the benefits. So we are now saying to the subscribers, correspondent banks and would-be investors in Africa, we have availed here the Mansa platform, which is a platform whereby you will get all the information regarding the entities in Africa to carry out your customer due diligence at the click of a button. So to subscribers, we are here to also reduce your cost in terms of carrying out customer due diligence checks. That's the process around onboarding the Mansa platform. Next slide, please. The Mansa repository platform has got 3 key pillars. And the main pillar is the customer due diligence section, which we have talked about and which is under discussion today. I will not labor much on it here. We also have got another section, which is Invest in Africa. This section gives you information around all the 54 countries of Africa in terms of what products do they import or export, what natural endowments do they have, and what is the operating environment in terms of GDP, social issues, and any other trade-related information that you might want to know before you start your inroads into any market or any country in Africa. It also, the platform also, this pillar also has got links to all the investment agencies in the various 54 countries of Africa, which means you'll be able to get intimate information regarding setting up companies across African countries and the requirements in terms of regulatory measures in terms of complying with doing business with each and every one of the countries. And then the third leg, which is news and events, under this pillar, we showcase or give space to our customers, subscribers, and contributors to showcase any news, trade-related news articles, or also parade any events that they might want to parade to the rest of the world through the Mansa platform. Next slide, please. Yes, the Mansa stakeholders are quite wide. We have noted that for Africa, we have got to do more to achieve what we need to achieve, and we need to get everyone on board. Yes, we have KYC registry traditionally for banks and other financial institutions. We have opened up the space for corporations and SMEs. And SMEs, why? Because mainly this is where we will be able to drive financial inclusion. Yes, as Africa, we are a little bit behind. We have got a lot of catching up to do in terms of financial inclusion, and to increase our levels of acceptance, we need to showcase visibility and to prove to the rest of the world that we have what it takes in terms of the governance structures as set by international best standards. So the Mansa Platform stakeholders includes SMEs, the regulators, financial institutions, policymakers, accounting and auditing firms. So when we talk about this, we talk also about the reliability of the information or the authenticity of the information that will be shared on the Mansa platform. So in that way, we have put up a framework whereby if an entity wants to contribute information on the Mansa platform, that information has to be verified by an authority. And when we talk about the verification process, I'll give an example of banks. If a bank contributes their information, a central bank has to come in to authenticate, to say, yes, indeed, this information is authentic. Through this way, we hope that we will foster confidence in doing business with African counterparties as well as Africa within itself. So in this journey, we have included policymakers because we know that governments and regulators are very key in driving this agenda that we have as Africa or the rest of the world to ensure that we minimize financial crime and also to ensure that transactions that pass through our countries and our entities remain clean as required by the international standards which are put in place to curb money laundering of any terrorism or financial illicit deals. Next slide, please. Yes, now we move on to Manta benefits. I think as I was just going down the features of the Mansa platform itself, I also touched on the benefits, but for our benefit and also for more exposure, I will reiterate that the Mansa platform has got standard templates that have been developed after taking into consideration the standards that have been put in place, either by world-recognized regulators like the Financial Action Task Force. Yes, so these templates have been designed to take care of different features that you find for various entities, SMEs, financial institutions, and corporations. So this will cover, the benefits will cover governance. You will see that the level of governance will increase. If an entity will be able to onboard the Mansa platform, they will be able to demonstrate. We would say that entity has demonstrated that it has got the governance structures. In that way, we are saying the categories of information that we require under Mansa ensure adherence to the best corporate governance requirements that we see in the world. And then we talk about Africa-wide impact. In this way, we hope to achieve international trade by lowering the cost of compliance. I have talked to a great extent about that. And we also look at risk management. Basically, Africa is perceived to be a high-risk destination of FDI. So we hope that through showcasing profiles of African entities on the Mansa platform, we will definitely be able to reduce that risk by ensuring there is transparency and visibility and disclosure around entities that are entering into any transaction with international parties or within Africa. And then we also look at trade promotion. We know that availability of information, before you enter into any relationship, you would want to know basic things about what's your name, where do you come from, etc. And when you enter into that relationship, there are basic disclosures. You'd want to be surprised even when you get into a business relationship. So Mansa, the Mansa platform ensures that business relationship from the onset are taken and decisions are taken based on information that is readily available and that is authentic. So that way we promote trade within Africa and with the rest of the world. We may move on to the next slide. We want to elaborate a little bit more around facilitating intra-African trade. We have noted that trade within Africa itself as a continent is around 16%. But when we compare with other continents, we note that they trade within themselves to the extent of 60, 70, 80%. So it is our view that if we provide, by providing the Mansa platform, we will be able to boost intra-African trade from the current levels of around 16% to at least 60 or 70%. In other words, we are looking at the four key pillars of intra-African trade, which is maybe create, connect, deliver, and measure. And where Mansa is coming in is on the second component, which is to connect. We want to connect parties in Africa. Africa should be able to trade within itself. A person or an entity in Nigeria should be free to send money to an entity maybe in Sudan. And that can only be done after there is some level of trust. So we hope that the Mansa platform is giving Africa an opportunity to build trust and be able to trade within ourselves as well as trading with the rest of the world. So maybe we move to the next slide. I'm very sure that the Mansa platform will transform Africa. Looking at the content of the platform itself, it has got information that is which we view to be provided or contributed voluntarily and authenticated by regulators and credit rating companies. And through this way, we hope that ultimate beneficiary ownership information, financial reports, this is rich content when we talk about compliance, and usually entities will not be very free to disclose that information, but we are encouraging our participants, African counterparties, our stakeholders, through education, that's training and awareness. We have been carrying out a number of training and awareness programs to try and ensure and educate our populace, our African populace, that in today's business, for you to access finance, for you to be included financially, you need to showcase, and you need to showcase who you are in terms of the mode of business that you are, your source of wealth, because there is need to ensure that the money that you will be investing in your business is clean, so that investors and banks will be very free to do business with yourselves. So the content of information within or required within the Mansa platform is all meant to foster that confidence and ensure that Africa gets the benefit that it's supposed to get. And what we would say is, you have seen that again, the Mansa platform has got 3 pillars, and in that way, it's a one-stop shop where you get all the information that you want. To the next slide, please. Mansa, I think through this slide, I just wish to say Mansa is one of the digital platforms which Afreximbank has developed out of so many initiatives which are meant to promote trade within Africa and the rest of the world. And we have dubbed this digital drive. We've dubbed it Africa Trade Gateway. And this shows where Manta comes in. I'll just go quickly through the continuum of these platforms that we have to promote financial inclusion. The tip is a trade information portal. This gives information regarding entities and specific entities and their products, what they trade in. So you identify a market opportunity through the tip platform. And then we have got the trip platform. Under this particular platform, you uncover market rules. So for the 54 countries in Africa, the trip will give you the regulatory requirements for you to trade, whether importing or exporting out of that country, and any other information that you require for you to do business with that particular country. So that's second. So after you have identified an opportunity and you know the rules of the market, the next thing is to carry out the customer due diligence, which is to go deeper regarding the entity that you want to transact with. So the authenticity of the entity itself will be verified through the Mansa platform. For each and every entity that comes on board the Mansa platform is assigned what we call the Africa Entity Identifier Number, which is a unique number which adheres to ISO standards as well, ISO 3-digit standards, and this number will be unique to an entity. So that customer due diligence will be provided, and you know that any entity that you find in the Mansa platform has been verified by a regulator. Then we also have got ATEX, which is a digital platform which is actually under development by the African Union in collaboration with Afreximbank, and this platform is will be transacting real time. And then we also have got the PAPS, which is our Pan-African Payment and Settlement System. And this platform will allow countries to trade in their local currency, even though they are paying for goods within Africa. Say you are in South Africa, you pay using your rand for goods that maybe you are buying from Egypt. So the central banks of Egypt and South Africa will have to settle. So I will not go deeper into that. The PAPS platform is also meant to improve financial inclusion and trade amongst African counterparties. And then last but not least, we also have got TBC, which is a platform that also looks at how you then navigate in terms of logistics when you are moving your goods. Next slide, please. Finally, allow me to extend an invitation. I would want, we at Afreximbank, we hereby call on all African entities, governments and regulators within the African borders to embrace and onboard the Mansa repository platform. There are several benefits to be recognized and we will be able to make Africa great together. To the rest of the world, we are inviting you to subscribe to the Mansa platform. We have carefully looked at the framework of the Mansa platform, and we are sure that all the information that will be shared will be credible and authentic for your customer due diligence exercises or information. Together, united, we can make Africa great. Thank you so much for your time, and I hope you onboard the Mansa platform. Thank you.
Thank you, Gamo, for that very detailed look into the Mansa platform. I'm very interested in the data validation and how central banks will actually validate the data, and maybe we'll come to that in the question section later. But just out of interest, we have one question from the audience that asks, how does Mansa organize work among the entities, and are there any MOUs that you need to do first?
Okay, thank you for the question. What I can say is that, yes, we have got documentation that ensures that when you are onboarding the Mansa platform, you are clearly aware of what it takes. By the way, onboarding is voluntary and the terms and conditions are very clear. So yes, there is documentation, and we do carry out training for any interested party And we also work with umbrella bodies like your Chamber of Commerce's, Bankers Associations, and any other regulatory body to ensure that all the verification is done and is done in time and in a credible manner. Thank you.
Fantastic. Thank you so much. So we've heard one very interesting private sector perspective. I think we're going to move on to hear another perspective from SWIFT. And I'm sure a lot of people listening in know that SWIFT connects more than 11,000 institutions and works over 200 countries, enabling users to exchange automated, standardized financial information. It's the largest sort of messaging system that we have here. Today, joining us is Roberta Di Benedetto, a senior manager in financial crime compliance. She's responsible for SWIFT's anti-financial crime compliance solutions and service portfolio in the EMEA region, with a dedicated focus on KYC solutions and services. She also brings with her experience from a number of different financial sector incumbents, including Standard Chartered and Bank of New York Mellon. Welcome, Roberta. The floor is yours.
Thank you very much. Well, first of all, I want to tell a couple of words about SWIFT. So SWIFT, as you said, is a global member-owned cooperative and a world-leading provider of secure financial messaging services. It connects more than 11,000 banking and securities organizations, market infrastructures, and corporate customers in more than 200 countries and territories worldwide. It provides its community with a platform for messaging and standards for communicating, and amongst others, we also offer solutions to enable our customer to support their financial crime compliance operations. Next slide, please. Amongst the solution that we provide in FCC, we do support KYC solutions. We do know that KYC is part of a highly complex process. So knowing its own customer is essentially at the base of doing any business. However, knowing a customer does not imply only identifying a customer, but it includes collecting, especially in the case of B2B segments that we cater to, a whole series of other information such as source of funds, ownership structure, beneficial ownership, type of business, type of customer served, products offered, compliance policies and procedures in place, and a lot of other public and private information that allow essentially to assess the risk profile of an entity. In addition, KYC cannot be considered as a one-off exercise to be done at onboarding level. Basically, once a relationship is established, an institution needs to have a proper screening tools in place, monitoring controls, etc., and establish a process also to reassess the risk of a counterparty on a regular basis, and also potentially based on some specific trigger events that, when occurring, may change the risk perception of a counterpart, performing what is So if we talk about the KYC cycle, we realize essentially that the KYC process presents a multitude of challenges. It's a cumbersome and redundant process. Costs have been constantly rising in the last few years. Regulatory controls are more stringent. Regulatory funds have increased. We reckon a lack of standard, which is making the overall KYC process difficult to manage. There's also the aspect of the high number and variety of requests throughout organization, which are also becoming more and more complex. So essentially, FIs have to do with this type of issue basically on a basis. The challenges may be different for a correspondent bank compared to a respondent banks. Smaller banks have issues linked to the risk of being de-risked by their respondents, and at some point for this process, at some point, this process has become really difficult to manage, and many organizations were really craving for a solution that could allow them to ease their life. So even the FATF mentioned that KYC requirement is essentially one of the drivers behind the reduction in the number of relationships. And so to improve the situation, FATF and the Financial Stability Board have encouraged basically technical measures such as the development of KYC utilities to reduce the cost of correspondent banking relationships by maintaining effective application of the KYC requirements. And this is where essentially SWIFT stepped in. So next slide. So the KYC registry. What is the KYC registry? KYC registry is a single central source to share and collect KYC information in a secure way, with the purpose of streamlining the KYC process for the entities that are participating into the platform. The registry was launched at the end of 2014. But what is the KYC registry? It serves the registry as a one-stop shop, essentially, to exchange KYC data and document, and it has the mission to set a standard in the B2B KYC space. In particular, we are currently catering to financial institutions and to corporates, and we are going to expand the registry also to other segments such as asset managers. It is a solution built with the community of SWIFT, by the community of SWIFT, and for the community of SWIFT. So the vision for the SWIFT KYC registry is to provide essentially access to up-to-date standardized KYC information that can be exchanged via your online platform, regardless of where the user sits in the world and regardless of the size of the institution. And essentially the fact that also not just the big players, but also small and medium institutions are able to upload their information easily on the platform, essentially maintaining a single set of data and document and sharing them with their correspondents instead of fulfilling multiple questionnaires, is saving them time and effort. And of course, for those who are consuming the data, it is an easier, faster way to collect the information. Does this eliminate in full the contacts or the questions between the parties? It cannot eliminate, of course, in full the and that's all, I think, a positive aspect, but it certainly helps banks and their correspondent to streamline their processes, to create a structure around a complex and unstructured process, and to create a governance around this process. When we talk about the concept of standard is a core concept. The concept of standard is core in general, I would say, for SWIFT, in particular for the we applied the same concept to the KYC solution, as standardization essentially means more transparency, more harmonization in the market, less ambiguity in what institution requests and need to provide in terms of data and document. The standard is essentially substantiated in a baseline of data and document and is applicable to all participants. And this standard has been built using the approach, the philosophy of the cooperation between SWIFT, the members of our community, as well as with other relevant stakeholders, such as the Wolfsburg Group, and for concern the corporate baseline, also the International Chamber of Commerce, in order to embed relevant questionnaires in the baseline. In addition, the central KYC registry model grants of Swift KYC allows grant information that the information are coming directly from the source. Each user of your data and maintains full of your data. That's also the security for what concerns the exchange. In addition, I would like to add that the solution is not a static solution, but is a dynamic solution that it has adapted over time to the changes in global KYC standards. We have seen an evolution of the baseline of data and documents in line with the evolution of KYC standards. We have seen an enhancement of the make the user experience more positive, and we have seen also an enlargement of the platform to other segments than just financial institution. As I said, we have been cutting also to corporate since about a year, and we will open also to other segments. So I think that the main concept for the main words that define the KYC registry are certainly global. So it's a global utility that we can leverage. Essentially, Swift can leverage for its global reach, and therefore it becomes inclusive. It's secure. It's based on the collaboration effort between Swift, the community, and other stakeholders. It allows participants to increase their transparency, and it gives a structure and a governance to a very complex process.
Thank you so much for that, Roberta.
Pass you the line.
Sorry, your audio went off a bit. Do you want to just say the last few sentences again?
No, I just said I'm going to pass you the line back.
Great. Thank you so much. I think that was really interesting. We have a couple of questions from the audience, but maybe I'll just start off with one question from me. So for the suspicious transaction reporting, I think the question is, where does that responsibility lie? So because it is a utility service that there is upload of information from different entities, whose responsibility would it be to upload the STR? Sorry,
who would be responsible to upload?
The suspicious transaction. So part of the KYC process, I guess, is uploading suspicious transactions so that other entities can see where there has been potentially illicit activities. So is the responsibility of the entity who originally put the KYC on the system, or is it the responsibility of where I guess I'm wondering, where does that responsibility for that process lie?
That part of the activity, which to me falls under the monitoring of the transactional side, let's say, of the business, is not included in the KYC registry, which is a platform, a tool to literally share and collect data and document the purpose of knowing your customer. However, per my banking, I would say, experience, the responsibility, of course, is well, it certainly lies in the in both parties. I would say, both in the one that originates the transaction, and if the intermediary party or the correspondent identifies a suspicion, then they should raise it.
Great, thank you.
But so the registry is more, I'd say, a repository, a dynamic repository, but it's a repository.
Yeah, so it sounds like, although it's dynamic, it collects a relatively large number of static information, such as name, address, the KYC check information, as opposed to something that's ongoing. We have a question from the audience that asks whether the Swift KYC registry is a free service. This is from Driss Chowkri, who's a senior expert of FMI at the Central Bank of Morocco.
Okay, so the KYC registry for us is a community initiative. It's not a commercial venture. So for the entities, the financial institution, the connected corporates that want to participate to the registry, joining the registry, uploading the data and sharing the data is free of charge. And the costs are generated or are triggered only at the moment where there is an effective consumption of a counterparty data. So if a counterparty is in to share its profile with its correspondence, there is essentially no cost associated to it.
Great, thank you so much, Roberta. So last but not least on our presentations, we have Mr. Randhawa, who joins us from India. Mr. Randhawa is the Chief Customer and Strategy Officer at CERSAI, which is the Central Registry of Securitization, Asset Reconstruction and Security Interest of India. It's quite a mouthful. It was created under the auspices of the Government of India. And I'm sure most of you listening in will be familiar with Aadhaar and how it has revolutionized the game. Another very interesting, innovative initiative that we're going to hear about today is the Central KYC Records Registry process, which was set up in 2016. I, for one, am really looking forward to hearing what Mr. Randhawa has to say about all the recent developments. I am going to caveat this by saying that Mr. Randhawa is expressing his own views, and they are not the views of the Government of India. Thank you. All yours.
Thank you so much for the introduction, and greetings to everyone from CERSAI, India. We have a slightly different kind of challenges in our country because of the kind of population we have. And initial challenge was to include people in the financial services, which has been going on as the things have evolved. The whole concept around the KYC has also evolved over a period of time. One of the main aim which we were trying to achieve in our initial days was that most of the people in the country were not having access to the financial services, and that kind of inclusion had to be done. And a large scale account openings was done in the country, and millions of accounts were opened. And when you open up your banking services or insurance services or other financial services to such a huge population, the challenge of managing the KYC and ensuring that there's no money laundering or other kind of activities does also become very important. And that's how the both things have evolved over a period of time and have synchronized themselves. And this KYC registry concept came way back in 2012. Must tell that before that, the kind of accounts being opened in our country were more on the basis of documents which could not be relied upon in entirety, in the sense that they were ration cards. They were accounts being opened on the basis of introductions, and even letters from the branch, from the village heads were being used for opening accounts. Of course, in those areas, in those days, the risk of money laundering, other kind of activities was low. Naturally, the whole concept was working around that, and it did serve the purpose at that point of time. But as the whole economy grew and we integrated with the world economy and other issues came up, then there was a need to formalize the entire KYC environment, and rules were brought in, and some kind of standardization was required for doing the KYCs. More important was to rely upon a document which can identify the customer and really find some kind of uniqueness in that, which is authentic and has been verified. That was something which was a challenge for this country, and initially some of the officially valid documents were considered to be any one of that to be submitted in order to identify the customer. which included things like passports and driving licenses and even voter ID cards. This did work for some time, and then we had permanent account numbers, which were called PAN cards also, which were being used. The standardization was not there. KYC was being done by the different institutions in their own manner, interpreting their own ways the KYC should be done, and there was customer, if he's moving from one place to other, will have to do entirely different set of formalities in order to get his or her KYC done. So the whole, there was a felt need that there needs to be a standard procedure of doing KYCs across various financial sector services. And that's where the concept of KYC in India came. And I wanted to dwell upon this subject because the background is very important. This country being unique, and we have around 1.3 billion people out here. So we have to have the whole concept working in some way different manner in compared to what has happened in other countries. Now in 2012, the KYC, can I have the next slide, please? Okay, that's how we grew, and that's the genesis of CKYC. In fact, this was conceptualized in 2012 way back. It was considered that some kind of standardization need to be done on KYC documents, and that standard should work across all financial sector regulators. It was considered that banking sector, the security markets, the insurance sector, and the pension sector, all these four big regulators, where basically people required financial services, should be brought under the umbrella of CKYC. And there should be some standard way of doing the KYCs and uploading them and sharing them among themselves. So that's when the KYC concept came, and then it was formalized. And in 2016, we went live. And we operationalized the CKYCR by bringing in a template, which was called a common KYC template for individuals. Legal entity came a bit later. We started with individuals KYC, and we created a template wherein the basic information on customer identification, their address, their documents, which were the basis of those verifications, were also uploaded to the CKYC registry. Must add here that it was also our aim that we should reduce the cost of the whole process, because KYC otherwise entails a lot of cost, and we wanted that it should be reduced so that the whole process is easy. And the lower strata of people also they do not remain out of this whole system. And that's where we started. And this common template, there was some backing, legal backing, which also came. It was rightly brought by the government of India, and it was made mandatory that any client relationship and moment KYC is done gets uploaded to the CKYC registry, and a unique identifier number, which is called unique KYC identifier number, is allotted to the person. Along with the template information, the documents on the basis of which it was verified was also uploaded to the CKYC registry. Aim was that once the person is allotted a CKYC identifier number, he can move on to any other financial service provider. And if he wants, if he already has a bank account and a CKYC number out of that, he can code that number at any other place. He can go to a security market, buy a mutual fund. And there, if he has to do the KYC formalities, he just can't give that number, based on which that particular provider will download the documents from CKYC. And there is no need, because there was any bank or any other financial service provider who has uploaded the documents, the responsibility of genuineness of those documents fall on that particular entity. So the downloading entity was sure that whatever has been uploaded is genuine and as per the terms and conditions of the KYC instructions. And there was no need for this man to carry this person to carry the identity documents once again and go through the entire process. And secondly, the process was standardized, so there was no need to give different kind of documents at various places. Apart from that, there was also a facility that the later RE or any financial service provider could update the information as well, in case there is some change of address or something. And this person goes to any one of the REs where he has done his CKYCR and provides the updated information. That RE will verify the information and update it into the system, and it gets communicated to all those reporting entities, what we call as financial service providers, so that they can update their KYC information at their end. So this whole process was created through this registry, and it was done at a very low cost. In dollar terms, I'll say the cost was somewhere around 1 cent to 1.5 cents, which was being done per KYC, which is a lot lower than what normally KYC entails. And it took off. Initially, we had some, as normally happens, we had some teething issues in order to bring on board this entire process. But then very steadily and surely we moved on this direction, and you'll all be very happy, and we are very satisfied on this part that we have almost 400 million KYC information in our database today. And more important than these 400 million is that there are around 150 million accounts which have been opened on the basis of downloading this information. So these 150 million account client relationships have been created on the basis of information which was already existing in the CKYC, a kind of collaboration or participative kind of KYC which are being done. And I'll also like to quote one more figure, which is around 30 million, which is a number of updations or the accounts which have been updated. That means information has been updated in these accounts, and these have been conveyed to all the reporting entities which have touched that KYC. We have moved a great distance on this, and we have stabilized and very strongly as far as individual templates are concerned. Can I have the next slide, please? Now, these are usual CKYC. Facilitate uniformity into usability. Deduplication process takes place. So in case a customer goes to a reporting entity or a financial service provider and provides his information, he can give his CKYC number and get the KYC done. Otherwise, if he has forgotten that, he can even there's a search engine where the parameters can be fed and his CKYC number can be ascertained from there, which of course the financial service provider will verify and then download the documents. There could be instance where a person is not deliberately or perhaps for any reason not quoting his CKYC number, and the information is uploaded to the CKYC by the second RE which is already existing in the system. Then there's a very strong algorithm as far as deduplication process is concerned, and it immediately pops up that this information is already there and encourages the reporting the financial service provider to download information rather than uploading it once more, so that you do not have more than one unique identifier for a person. So that's a process we have inbuilt in the whole system, and it's working fine at the moment. There have been some instances, a very few one, rather negligible one, where different kind of OBDs have been provided and person has escaped this deduplication process. But those are so minuscule that we have been able to find that out some way and have been informed to the concerned financial service provider. We have, rather buoyed by this success, we have moved over to legal entity templates, and that has also been introduced now. And within a short span of a month or so, when we are operationalized this, we have almost 1 lakh information which have already been, almost 1 lakh information which have already been 100,000. Okay, I've been told that almost 100,000 information have been already uploaded on the CKYC system. In legal entity templates, it's much more complex than what we have in case of individuals, because beneficiary owner is more concerning in legal entity templates rather than in individuals, because in individuals you rarely have beneficiary owners, but in entities you have more incidences of such, and the whole process has to be more robust and more analytic in order to. So we are working with that, and I think we'll need some improvement in our templates to make it more robust as the time goes. And we're very open to that kind of improvements so that the whole system becomes more robust. Can I go to the next slide, please? This is the process I had just explained, wherein a customer goes to CKYCR, and in case the information is already there, it is downloaded, otherwise a new CKYC identifier is generated and informed the customer. Along with when this information is given to the customer that the CKYC about CKYCR number, there are some basic details which are also provided to the customer, so that in case there are any discrepancies, the customer can straight away go back to his reporting entity or the financial service provider and get it rectified. So that process is also there. I'll go to the next slide, please. These are the benefits to the stakeholders. Customers, of course, he will do one-time KYC compliance. Need not do it every time he goes to each and every institution. There is no repeat documentation. He saves time. It's a paperless process. It's all digitized, so there's no human intervention in this. As Sir Mr. Osam was mentioning, Aadhaar has made a revolutionary change to the because it has provided us one ID which can be accessed by almost 95% of population in our country, and that has also helped us to include all those strata of society which was devoid of financial services till now. And anyone who is eligible to get direct benefit transfers from the government of India necessarily has to provide Aadhaar as one of the identities for KYCs. Has worked well. I think the exponential numbers which KYC has seen over the last 2-3 years is, I think most of the credit should go to Aadhaar, because that's a document which is now widely available with the people and becomes the basis for KYC now. So that, of course, is a big success story for the country. Aadhaar in itself is a unique kind of because of the kind of database they have built and the biometrics and the kind of uniqueness it has provided. And of course, it is now available with most of the population of the country. Industry party, it has some benefits for industry participants, banks also, and insurance companies. They don't have to run around and do the KYC processes. They can simply download the information. So it becomes so easier for them. It reduces time for them. It saves on cost. As I said, the cost is just between 1 and 1.5 cents, and we'll find ways to reduce it further, because unless we reduce cost and make it available to all people around, it's in fact, the organization I advise is a not-for-profit organization. We don't make any profits. It's just to whatever is the cost is being recovered. That's all. And as we go forward, perhaps and the cost goes down, we might pass it on to the customer straight away. For regulators also, it is a help, because they get all kind of MAs on the number of financial service providers which are with the KYC. CKYC they can monitor, there can be a monitoring, because a unique CKYC number is connected to many accounts. They can, in case they want to check out, they can check out which all accounts a single person has, where all he has. He might not have information on accounts because the account number is not a KYC information. So we can share only what is a KYC information. That's a challenge which emanates out of the Act itself, the rules itself. So whatever is a KYC information can be shared, and what is not a KYC information is not shared between through the CKYC. And that's what CKYC does. And we, as I said, we have been pretty satisfied with the way it has moved in the last couple of years. It has been a success story for us, and especially because we had challenges given the kind of geographical positioning India has and the kind of population we have. But it has been very satisfying, as I said, and now that we have moved over to legal entity templates, we hope that this will further help the industry and MSMEs especially to have the KYC formality done in a cheaper and a more efficient and seamless manner. Thank you so much for introduction. I'll take any questions which audience would like to ask, please.
Thank you so much for that, Randhava. That was hugely informative. I think maybe if I could just start with a question. We've talked about the reduce of costs and the friction for customers, and potentially how we could help for financial inclusion by serving low-income customers. Randhava, you said it costs about 1 to 1.5 cents to do this. But then I understand there's a lot of upfront costs that are involved. So maybe I'll turn to Kendrick first and ask, do you think that the ongoing cost savings justify the upfront cost?
In fact, yes. Can I take this, please?
Yes, of course, and then I'll come to Kendrick after. Yes, sure.
Okay, look, these kind of projects which have perhaps initial cost has to be there has to be government help in this, and that's how it goes. And as I said, the cost can be recovered over a period of time, even by subsidizing the kind of services which you are providing to the customers. And look, personally, we have never seen cost in isolation. In fact, I'll say that always cost should be seen along with the benefits. Otherwise, you will always tend to make some kind of decisions which might not be far-fetched and in the benefit of the society. So when you are doing this kind of thing where you are providing KYC and your aim is to have financial inclusion in a country like us, I think Government of India was very keen to have it, and the upfront cost was borne by them so that the service is provided. And as I said, the aim is not to earn profit out of this. It's just like covering your costs, your running costs, your upfront fees in whatever way it can be done. Even if it is not done, it doesn't make a difference. I think the kind of benefits it provides to my society and to my people in the country is tremendous. So not getting too bothered about cost and seeing it in the terms of benefit makes it a more rational looking proposition.
Kendrick?
Yes, so Shamista, if I may add, and actually I agree with Mr. Ranhawa in the sense that there are two dimensions to this cost. Right? I think firstly, there's the government dimension, and in building this as digital infrastructure, right, then there's an investment the government makes, right? And I think from an operating cost perspective, I can't quite speak for the banks, but if you look at what one of our other local banks, OCBC, released it last year in the statement, what they said was this: 3 in 4 of their credit cards are acquired digitally, and 3 in 4 bank accounts are opened digitally, leveraging MyInfo. So that's like 75% of acquisition, right? And in terms of secured products, they went on to say that integration with MyInfo in the product portfolio application process has enabled the bank to offer 60-second approvals for car loans and 60-minute approval for home loans, right? So this is down from days and from weeks. So I think for the financial institutions, the benefits must outweigh the costs, right? Because virtually every bank that has consumer products is on the platform, and almost every single consumer product is on the platform as well. And digital platforms like Grab and Shopee, the C Group, for example, have also come on board, and they're extending the KYC to offer non-bank financial services. So I think, to Mr. Ranhawa's point about looking at the benefits, I think to them clearly, it must outweigh the cost.
Thank you. And then maybe just a follow-up question to both of you on that. Am I hearing that you do think that the government has a role to play here in doing this, or do you actually believe it could be a private sector? I'm sure I heard Mr. Ranhawa say that it is the role of the government to actually provide these sort of enabling infrastructures to support sort of the industry because it has so many benefits in the long term. Would that be the view of other panelists as well?
Yes, maybe I can come in. Looking at maybe the African continent, you can see that the cost of being excluded in terms of access to funding is very high and has got great repercussions. And if we look at the effects of, say, financial crime, like cybercrime, which would be solved by these digital solutions, I would think that the upfront cost is worth the pay for the savings that will really accrue. Whether we talk about financial benefits or qualitative benefits, I think the benefits do outweigh the costs eventually, because we do not only look at the financial outlay, but we look at how we can make the world a better place, which allows everyone to access the funding that is available. And I think the cost is worthwhile. So cost benefit wise, we have to look at the spectrum of benefits as well as the costs. And I think it's really worthwhile.
If I may, I think we share pretty much the same view, in the sense that SWIFT, being a cooperative, I mean, this KYC Registry initiative was solicited essentially by the community. It's a key initiative for our member banks, and we treat it as and corporates as well. We treat it as a community initiative, so it's part of the effort of SWIFT as a cooperative to work in close cooperation with our users to understand their challenges, to help them innovate, and also to allow them to do their job in a more efficient and effective way. And having a KYC utility like the KYC Registry has allowed them to reduce the time and effort to perform the KYC process and to use the resources in a more effective way, more, I would say, on the analytical side of the process instead of the collection, document and data collection side of the story. So the vision is that really of helping the members of the community digitizing their processes and to provide access to the information in an easy way, no matter where the institution sits.
Great, thank you. I think you were hearing sort of an overwhelming response to say that the benefits definitely outweigh the costs, especially for create interoperability. Randhawa, if I can maybe come to you first on this. You mentioned the number of different ID systems that India has. So Aadhaar, PAN card, the ration card, we have voters ID. So there are a number of different systems. How do you ensure that the KYC utility and the registries that you're building are interoperable with existing infrastructure? And maybe if we can also talk about the use of APIs, expand on that a little bit. That would be useful.
Sure. I think that we can talk about interoperability in a couple of aspects of those. On a more general level, I'd say vis-a-vis the Untitled and other initiatives. So success eventually of initiatives like KYC Registry or in general of a global KYC utility lies in streamlining the KYC processes, also by working together with other initiatives. So for instance, more local initiative in our case, as we are a global as we are the global initiative. So keeping a collaborative mindset is absolutely key for us to be able to move ahead and provide value to the community. There are a number of, as I said, of just a smaller number, I'd say, of global initiatives, but we're seeing many local initiatives that are covering specific regime standards. So there is where there may be opportunity as well as opportunities to cooperate, as well as we are exploring UBO register, albeit we are at this stage at the moment, but we scrutinize, we monitor. So we are not interested in integrating on a purely, I would say, commercial ventures, but really in considering opportunities to benefit the community. Second angle, let's say from a customer's perspective, you were talking about API. We have as a company an API strategy, and we have an API available on our KYC registry platform as a foundation, let's say, for connecting the KYC registry. We have an internal APIs, let's say, that connect the KYC registry with other various SWIFT solutions, such as, for instance, business intelligence solutions and third-party providers, as well as the API technology enables our user to automate and streamline the consumption of KYC registry data and documents through a secure data connection. So effectively, the KYC registry API allows users to automate the retrieval process and to enable basically faster and more efficient monitoring of the to their customer data by allowing integration with their own internal KYC system, KYC tool, or even by supporting technology providers that are supporting in turn our members. So the automation essentially reduces time and the resources required for the retrieval, and allows, again, the staff to focus more on, I would say, more the analytics side of the KYC story.
So maybe if I can ask about maybe data validation and sharing. So there's obviously, with the APIs and the sharing, there is issues on data protection, which we've all, been thinking about and talking about, and it's something that governments need to think about quite carefully, about the use and the portability of data. Kendrick, if I could maybe come to you and explain sort of maybe the views and how the balance is maintained between the sharing of data and the need for protection and privacy. And also, because I guess all of the data is collected in one big database, how's the security of this sort of database potentially maintained? Thank you.
Right. So maybe I'll cover data protection first, and I'll touch a little bit on security. So in terms of data protection, I think for many countries, and for us in Singapore, we have the Personal Data Protection Act, right, and which is legislation, as well as for financial services, the relevant sectoral legislation, right? So it's important for the Mindful system to enforce the principles of these frameworks to establish trust with users and institutions, just as you have mentioned, right? And for us, these are baked in the service design, right? So for example, firstly, when financial institutions onboard Mindful, their data request is actually reviewed for relevance and purpose limitation in relation to the service they're offering, right? So for example, if the service is for CASA account opening, then proof of income would not, be a relevant data request, for example, right? Secondly, when customers apply for a bank product, they're offered a choice. They can onboard via the express route using Mindful, or they can do it manually by submitting documents, right? So the purpose of the service and data requirements, if you use Mindful, are also clearly spelled out, right? So typically, faster, instant, that's what customers would choose. If the customer chooses a slower route, then the bank usually will say, what are you trying to hide, right? So I think it's also a signaling as to the level of risk. Thirdly, the customer is authenticated through his SingPass national digital identity and provides consent to release the relevant authoritative data, right? And only the user can access or release his own data. Lastly, user will receive a push notification or SMS as a record of their transaction, and they can look up their past transactions within the SingPass digital ID app at any time, right? So I think from a service design, that's how we do it. Now, in terms of security, I would just want to put it this way, right? It is not necessarily one big database. I think APIs allows us to take a slightly more federated approach to the data, right, which then gives some protection against concentration risk. At the same time, I think for security, we adopt, the relevant best practices for people, independent people to review what we are doing, right? As a government, I think people expect us to do this to the highest standard. And I think more recently, what we've been doing is we've been doing what we call a vulnerability disclosure program, right? Which means that we invite white hats, right? So these are ethical hackers, to look for vulnerabilities, right? Report them under a specific program, and then we reward them, right? Appropriately based on the type of vulnerability they discover, right? So we work collaboratively with well-intended people with the right skills to ensure that we have the right level of security in place.
That's great. And I'd love to ask a lot more questions, but unfortunately we're nearly out of time. So I'm going to ask my last question, which is, what do you want the audience to leave with? Maybe you can, and I'm going to come to each of you in turn. I just want one take-home message for the audience that you want them to leave with, whether it's about the impact on inclusion or one of the challenges that they faced or that you faced in your work, or so what do you want them to leave thinking about KYC and digital ID? Mr. Randava, if I could come to you first.
Okay, what we have done till now is, I will say, only the first step of CDD. Customer due diligence is a much bigger process. Just collecting information on identity of the person and the nature of business he's doing is one part of it, and which is shared at the moment in the form of KYCs. It also provides, as I said, the comfort that these are verified documents, and the downloading entity will have the satisfaction of having downloaded a verified document, doesn't have to seek those documents again. But due diligence is a bigger process and involves many more other steps, and I feel is much more dynamic than just KYC information, which is more static in form and perhaps updated on a periodical basis. As all of us know, there is a risk categorization which is required, and then the transactions which have to be monitored. So these are all steps of due diligence and our ongoing process. And I think more of collaboration comes there. That's where the participation comes from the innovation side, from the private sector, and perhaps even from the academics, because we have to find new ways in order to not only collect this information from various means and channels, but also share them amongst the financial service providers, so that they can make a meaningful use of those informations. That's very important. Scope for considerable innovations on this side. And mind you, when we get into this area, we are stepping on a slightly more challenging field, because moment you talk about innovations, moment you talk about sharing those due diligence factors, there is challenge of cost escalation. So now you have to balance between these two. You have to find innovations which are also cost effective and are easy to implement and to share and collaborate. That's very important. And just adding on to what my colleague from Singapore said, the whole legislation has to be in sync. There are various laws, privacy laws, there are customer confidentiality, and then you have money laundering laws. Now, in order to allow these kind of sharing, you have to have the laws which do not create a kind of, I'll say, any kind of impediments or barriers in data sharing and privacy. So that's also very important. So what I'm trying to say is, as we move from just KYC registry to a customer due diligence in entirety, which is, as I said, a more dynamic process and requires updation almost, it could be on a daily basis and other things. The need for innovations, participative collaboration between the private and the public sector, even as I said, from the academics, so as to suggest new ways to bring about this. As I said, I find this to be more challenging than what we have done till now. This one easier step we have done, and now we need to step onto those areas where customer due diligence can be done in entirety through different means, channels, and then also shared amongst the people, as we are doing in the case of KYC. That's what my sense on this subject is.
Great, thank you. Collaboration is definitely key. Roberta, if I could come to you next, maybe Tweetland, what do you want the audience to leave with?
Sorry, I was on mute. In the interest of time, I'm going to just maybe share some of the words that I would associate with KYC utility concept, which so I want to leave with some keywords that to me are collaboration, trust, and global standards. So a KYC utility that works with a standard and shapes standards according to the changing needs of the market, that is easily accessible, and that can be connected, and that can connect parties no matter where they are in the world, can be a truly inclusive vehicle.
Fantastic, thank you. Kendrick,
last
words for the audience.
Yes, so there's potential for digital ID systems to facilitate KYC of foreigners for local transactions, such as foreign students, admission and travel when COVID-19 restrictions ease. Right, they also need financial services in the countries they visit. Right, so we're happy to discuss and explore such use cases with anyone, right, who would like to solve this problem together.
Thank you very much. Last but not least, Gamo. You're on mute, Gamo.
Thank you so much, Mr. What I want to say to the rest of our audience is that the requirement for know your customer and customer due diligence is a requirement which is here to stay, and the need for us to really separate identities from one entity to another, one individual to another, is very key if trade within the world is to continue. So it's in our interest, all of us, to embrace the digital KYC world, as it will really cut the cost of doing business across the world. And I also want to really say specifically to the African continent, we have the platform, the Mansa Platform, which we have designed to enable Africa to be included in accessing funding. Let's embrace the platform and let's onboard the platform. And I'm sure Africa will be able to make paces to catch up and also be able to receive the FDI, which we also have been starved of for some time because of the various reasons that have been discussed on this platform. And what I can say to the rest of the world is that, yes, Africa is now on the map, and we are here to support as Afreximbank all initiatives and collaborate and work with all the entities, including all global entities, to ensure that Africa meets the standards that will ensure that Africa is also on the world map and will make it in the world of finance. Thank you so much for your time.
Thank you very much. And there you have it, folks. We've barely scratched the surface about KYC utilities. There's a lot more to discuss here, and I wish we had at least half an hour more to answer all the questions that I had planned. But hopefully we have a lot of material for our next session and a lot more material for future work that we can do across countries and between the public and the private sector. Do stick around and wait for the next session, which is on cybersecurity and trust. It's specifically going to talk about exploring vulnerabilities that can impact DFS applications, specifically on feature phones and basic phones in emerging economies. So it's bound to be a very exciting session. Thank you very much to my panelists, who were all fantastic, and to the audience as well. The only worry is that we ran out of time, but thank you very much. And there is a feedback form that will pop up on your screen. So only fill it in if you're going to give us a 10. Don't bother otherwise. But hopefully you've enjoyed the session, and see you all again soon. Thank you. Bye-bye.
Thank you and goodbye.
Thank you.
Thank you. Goodbye.